the way the market's this tight and the price is not reflecting the true nature of the tightness in the silver market. It's going to go along, and don't be prepared for the unexpected. Cannot manipulate the long-term trend, but within the long-term trend, you certainly can manipulate the market or change it. I mean, we wrote a book, Chris Marchese and myself, called The Silver Manifesto. And in that book, we basically proved manipulation by using the Sharpe's ratio. I don't have time to explain it, and I don't think I do a good job of it. So just to be crystal clear, I mean, the market, I don't think they're in there manipulating every day. But I do think, or I think it can be proven, that from time to time, studying the commercial interests, the commitment of traders, seeing where the price action is, knowing that the funds are out of money. It's time now, boys, to ring their chimes and run the stops, as they say. I mean, it's very common to hear that terminology if you're a pro or semi-pro, run the stops. So they'll say vast amounts of silver on paper that doesn't exist. Or let me reframe that. They could sell vast amount of paper that they hold in their accounts that isn't backed fully by physical, probably more accurate statement, and that drives the price down, because silver never stops to ask, is it real or is it fiction? It just says, this is the market. The silver market is a derivatives market. Can I say that again? The silver market is a derivatives market. That means that the silver market is a derivatives market. So it's not based on what the buy and sell of silver is, although of course that plays into it, but it's the amount of paper being pushed back and forth that determines the price. The only way the physical comes into play is when physical demand comes off of that market. So with, when we continue in this draining of the silver market that you showed in that graph at the same rate that it's at right now, there will come a time when the physical market takes over. As I said earlier, we've already seen it in the palladium market of massive substance, because palladium's gone from the time that Ford Motor Company, needed the palladium because it's much cheaper than platinum, folks. You may not know that, but at the time Ford did it, it would save a vast amount of money. And now, of course, palladium is double, at least, the platinum price, if not almost triple. Point being that the physical market does take control. It can take control. It can happen in the silver market. And it already has in a way, and it's still happening in a way, because there's such a spread between the physical market retail and the derivatives market backed by commercial bars, or partially backed by commercial bars. So the arbitrage still exists, meaning I could buy physical silver in commercial bar form and turn it into 100-ounce bars and make a pretty healthy spread. And this has gone on for much further than it did in 2011, when we had a huge spread like this. It lasted a couple, 3 months maybe. This time it's lasted for months, and it continues. Now it is backing off. I'm well aware of that. The premiums are coming down, but not to the level that I would consider normal after looking at this market for 4 decades. If you look at history, we've seen 35 million ounces has been kind of a low that I've seen a couple times. It did move the market, but not maybe as significantly as I would have expected. But it's not dependent solely on what the registered category holds, although that's something to watch and is very important. But you could have an overwhelming factor that's one-off, meaning like the palladium market, when Ford Motor Company moved from platinum in the catalytic converter into palladium and had this huge one-off order that decimated the market physically, because there really wasn't enough palladium to cover the order. I'm not saying that'll happen in silver. All I'm suggesting is that it's going to go along, and don't be prepared for the unexpected, especially now with the way the market's this tight and the price is not reflecting the true nature of the tightness. So it's very coincidental that they took this paper paradigm and sold tons and tons and tons and tons and tons of silver in the paper markets and drove the price down. At the same time, the Fed was coming out with this more or less hawkish stance. They want people to believe that, one, the Fed's more powerful than it is. I'm trying to pull the curtain back on the little man behind the curtain pulling the levers at the Wizard of Oz, because that's all it really is. And so that occurrence would have driven the market down if it happened a week before the Fed, or a week after, or a month before, or a month after, if it happened tomorrow. It's not a function of interest rates at this time. It's a function of how much paper selling goes on in the market. The physical market is the big driver in silver. Industrial plays a very significant role, but it's the margin. It's what is the variable that changes the most, and that is a monetary demand. Last year we had extreme monetary demand in silver. It was greater than industrial demand, probably for the first time ever. I think more and more people, and primarily through the Wall Street silver community, are waking up to the fact that silver is an undervalued asset and probably one of the best, if not the best, inflation hedges that there are. Silver shortage is a really tough one, because that would mean that the commercial bar market is in, short supply. And, I just got one of my clients that sent me direct from the COMEX, their response for physical delivery, and they settled in cash. And there's really not a darn thing you can do about it, even though he wanted physical delivery, because the contract says they can settle in cash. Maybe this is the only one that month. I don't know. I don't know if there's any way to know unless you work for the exchange. But it does prove the point that they could be, I'm not saying are, but they could be settling some of these accounts of cash. And you rant and rave and say, well, I want my metal. Well, read the contract. We have the right to settle in cash, and we did. So that's one of the problems with it. On the other hand, they couldn't do it across the board, although it could come to that at some point in the future. But if they did it across the board, then obviously there'd be a physical default, but not a technical default. I'm not trying to be cute here, I'm trying to be legal. There would be physically impossible to fulfill all the demand in the physical realm, but they wouldn't default legally because they're allowed to settle in paper. So hopefully that's crystal clear. I'd like it to be so. There are other ways to buy commercial bars that are even better than the PSLV, but I'd reserve that for people that are buying in the $50,000 range or higher, because it's not something you can do by buying silver rounds or silver 100-ounce bars. More physical buying, no matter if you're buying a silver round or a silver bar or a commercial bar, it's still demand. And it's going to help the market overall. And a lot of people that are in the silver market now understand that.